So now we're gonna go back to the S&P. Okay, S&P same. Well, we can do it here. This is the daily chart, so we can do the same thing. One down in two. Here is your three versus one. Okay, so the three versus one the same way. You see, like this third wave is a 62.49 now from this low. The actual low is not here. The low is actually here because we have a truncation. Okay, which I did it here on this 1 hour chart right there. This is a clear wave count right there. So the market low, which was April 7 low, which was 48.35, you cannot, this is a three-way move. You have to make this thing a truncation. Okay, and then from here you have to count one, two, up and three. So now we do three versus one. Three versus one, the S&P was 6,095. All-time high was 67.47, and then we broke above 61.47. Okay, as of in the last 2 days. Now the 200%, which is a 63.56. So we have a pretty wide zone, okay, between 161 and 200%, which is up here. Now, where does this thing stop? Well, I don't know that. Okay, because with in this green four, we have one, two, three, four, and this is the fifth wave. That's how I see it. So now if the price is gonna keep pushing higher, then I have to make some of the adjustments here and then to see if I can just open up some of like this little bit more fifth wave to the upside, which I can do it. I just gotta have to move some of these labels around just to give a little bit more room to the upside. But if you just simply look for this for three versus one, a three versus one, 161 and 200%. These are the textbook prints for a third wave in the Elliott wave. Now let's assume that this market top is here, which is 61.85. If we do that, I can leave this demand here and then run four versus two and four versus three, which is the typical fourth wave retracement. It comes right here in this zone. Okay. And now if the price is going to push even higher, okay, meaning that then these retracements are going to go up, you see? So I don't know where the high is. So more the price is going to go up. All of these retracements here, four versus two and three, you see, they're going to keep moving higher. So we don't know when we're going to start this, but the point is that this is going to come. Okay, one is gonna come next month, a month after that. Well, we don't know that. We simply don't know. I'm trying to see because the thing is this, you have to understand this is a major resistance right there, which is that 50 61.47. Why is that? Because this is where we had a 22% decline as we in March, right? So now the price has recovered all the way back up. Now it's trying to make making a new high. So the close yesterday was good. You wanted to close above 61.47. Now this area right there, call it like 61.50, is gonna start to act like a pretty strong support. If the price starting to close, meaning that we have to watch couple closes on an intraday basis, if the price starting to close below this line, we can then we will see that if this is still quite a bit of room though, you have to understand this, like you see this is like a 5% decline, 5-6% somewhere around here. So we have this, so we have this zone to the downside, which we don't have any signs yet, but at the same time we're just gonna see like where is this third is gonna end. So on this three versus one from the lows, now we have this 200% sit in it. These are very strong fibs right there. Okay, especially when they kind of stack together. Yeah, market is gonna. You see, yesterday was 61.85, kind of sold off right away. Yeah, these 200 they usually don't just break that easily. That these are very strong fib. Same thing when it's going to the upside here. The 3 versus 1 is gonna get here to this 200 mark. Yeah, you mark the market 100%. The price is gonna take a bit of a pause. We'll consolidate a bit, kind of starting to back off, and then after that it can make another attempt, you know, higher. So, and now if we go back here to the cues, same thing. Truncation here, wave one, wave two, 3 versus 1 was 530 on this one. That was a new all-time high, which is 540. And now we're right here in the same area. So here's a 4 versus 2 and 4 versus 3. So I can actually, so now with this green 3, we have same 1, 2, 3, 4, and 5. You see like how everything is matching now, which is good because we want to keep it that way. One green, one down in two. There's your third, fourth, and fifth. Same thing here with cues. One, two, three. Well, pending fourth wave, you can call it for now, and then fifth. Okay, so there's this is gonna come. When? Well, I will let you know when I'm gonna get when we're gonna get the confirmation from here. Here, we need these swings to roll over along with these weekly. So once these same swings will turn direction lower, that's when we will start thinking. Well, then I will say like, okay, you know what? Yes, we're starting a fourth wave now. We need some sort of initial drop first, to make a case either an A wave or some sort of a 3 wave decline. We can say like, okay, yeah, it could be a W or something, but it's all about we need to see if this is basically what it is going to be a higher low. Okay, so you have this is going to be the higher low. Wave third is always going to be a higher high. Wave four is going to be a higher low, and then we're going to be looking for a fifth wave, which is going to be another higher high. That will complete a one higher degree. Okay, and then we'll look for another ABC down to the some sort of a correction, not as this deep, but who knows what can happen. But you look for F once you complete 5 waves, then you expect a 3 wave decline. So that's a long way out. Okay, so because we're still within this 5 wave structure right now. Okay, so I have it here. I can leave it here because for me it's just all I gotta have to do just because if I'm gonna just leave these retracements here based off 6185 high. And now if the price ends up making 6232 high, that will move these fibs a little bit more higher, you see? So it depends, like if it's gonna go up here, see, the entire stack is gonna start keep moving higher and higher. So we don't know where this thing is gonna stop. So once if I will see some sell signals, you can tell like if because this market is full of news. Okay, it's about tariffs, about wars, about this. It's like a circus show. Every single day is always something. Last 2 3 days has been kind of quiet because he was out of the country and NATO. Now he's back. So yesterday he came back, boom, that's it. You see how Canada says like they're gonna tax whatever this, and then yeah, now the deal is off like right away. All the conversation, everything that is going on with Canada is over. It just market responds right away. So this now then over the weekend and Monday he's gonna say like, yeah, okay, we're back talking again. It's just I know it just it pisses you off, to be honest. And believe it or not, I get irritated as well. Like, what nonsense is this? One second you have they're doing this. He just got back from NATO, from G7. Sorry, no, the not the NATO, G7 in Canada. He was there standing with the Prime Minister of Canada, right? With all the rest of the leaders as well. And now he came back. The same guy that he's standing and taking pictures is like, oh, everything is so great. And now they're like taxing you like, I don't know, 400%. I don't understand. 3 days ago, you were with the guy having lunch, sitting one on one, and you coming back home. It's like, okay, yeah, I'm gonna hit you back with these taxes. I mean, I don't even know what makes sense. How these news are circulating, you just don't understand. 2 days ago, like, oh, the United States already signed a deal with China 2 days ago. How? What? What was? They just like everybody knows, like, okay, fine, we're talking this and this, and then finally, when they're gonna agree on these tariffs, this and this. Oh, but no, the Treasury Secretary and everybody else coming. Yeah, we already, U.S. and China already signed an agreement 2 days ago. It's unbelievable, to be honest. It is just unbelievable. How is these, like, how everything works? It's like a joke, you know? But as I said before, it's just been only 6 months, and this is just get used to it. That's just the way it's gonna be. This is not just that. I mean, we still got another 3.5 years to go, and it's just it's just a pure news driven market, to be honest. Before it was all about like tariffs, this and this, and you wiped off trillions and trillions, like trillions of dollars off the market by doing this, and then no final deal. We're talking with this and this, and we're back here. You know, not a single deal has been made except for with the Britishers. That's the only thing that I can think of. They could were actually like, okay, fine. They were actually made the deal. Now he's talking about, well, making a deal with India. We're gonna make a deal with Pakistan. We're gonna make a deal with Japan. Japan a couple of days ago was like, we're not interested in paying this much taxes and this and that. It's just like news after news. It just nobody knows what these deals are, how they're written, like what is in there, and at the same time, Feds say like, okay, buddy, don't expect me to start cutting rates because be just like. I mean, I don't want to sound way too much political or something, but these are the facts and these are the things that we have to consider, and we have to talk about it because these are the ones that impact the market on a daily basis. This is where we have our positions, and we don't even know what the heck is going to happen to them. It's just the way everything is going on. It just it's very confusing, especially when money isn't involved, and that's just it's like your emotions are playing at the same time. On top of it, you got bombarded with these news. Just none of them even actually make any sense. Two guys are coming saying something else on a TV, and then at the same time, CNBC is milking this thing 24/7. This and this and this. It just Well, the bottom line is this. Yeah, the price market has made a new record all-time high. Fine. It's been a strong month. Month is gonna end on Monday, it's the last day of the month. And then what we have coming? We have same thing, job first, job report. Then we're gonna have the CPI. Then we will have the PPI. Those two will end, and then we're gonna go right into a earning season. Earning season is gonna start probably like in the next 2.5 weeks. So some of these earnings are coming up now. We managed to play a Nike earning yesterday that played out pretty well. Couple guys were sending me a DM. They said like they didn't take it. I was like, well, I don't know, man. I mean, what to tell? What to tell? I'm not gonna come and push the button for you. I've been talking about this on on a regular chat, just to say like, hey, I kind of see a bit of a signs. There's a buy signal actually on a daily and a weekly time frame on Nike that kind of get me a little bit interested, and I was like, you know what, I'll take a shot. I know it's a um, beat up stock over for the last 4 years. I don't even know if this is the bottom. It could be, but I just goes off. I just went with the signals, to be honest. Like, okay, I'll take a shot. I mean, the kind of was a bit of a whipsaws until the conference call, and then finally took off. So okay, just a small lotto, but these are the earnings that everybody wants to play, right? That especially like, but they don't come that often. Let's put it this way: you have to play like 10 of them, that you're gonna win probably like two, three of them. you know, the earnings are always. I do trade them, but I'm not a really huge fan of. It's just you just trading volatility, and you just absolutely have no idea which way the stock is gonna go. A stock can report a horrible earnings, and a stock just can just literally pop, or it can report a very strong earnings. Stock is just gonna either sits flat, or it's gonna go down. So just it just all depends on the IV, like how much they pump the IV up, is to see how they're gonna crush those premiums. So most of the earnings, the premiums where they get destroyed is on these straddles, because they're trying to hit both ways to see where they're gonna get paid. That's where they're gonna keep the stock flat right at the open. Don't move the stock, crush both sides, and that's it. Your straddle is toast, because straddles have a very high theta. So because you're trying to play both sides, so those are and they're pricey. So you starting off here, and now either the price breaks here, or the price breaks here. That's how you're gonna make money. If the price stays between the straddle that you're buying and the one you're selling, in between anywhere here, where if the stock opens, yeah, you toast, because straddles, they have a very high theta. Yeah, you either need a big move to the upside, or you need a big, huge move to the downside. So Nike straddle, if somebody did it, definitely got paid well, because stock opened, over 10% or so. So if you have an open somewhere around here, yeah, your short side right there is going to get toast, but your call side is the one that's going to pay you the difference. So they're good, but if you know, it's just a wild prediction lotto that you play, and you expect that strong earnings will come and the price is going to react and it's going to push hard to the upside. Or if they miss and don't give any guidance and stuff, and the price rolls over, well, that's just a different way. So, yeah, but they're high theta, very high theta play. Fixed, yeah, on the S and we have 200%, 6190. Well, this is on S&P is 6100, and this one is 6350. Yeah, you have to the only thing is this, you have to understand that When you're going to come down to a 1 hour wave count, it's going to give you a much more read on a price, right? So then when you're going to go back here to a daily time frame, okay? Now these are daily bars. So now from here, you see, a lot of people will start the wave count right from the low. This for the because that was the low. So when you are working on a daily time frame, you see like it's a one, two, and three. So if you just put this thing here like this, that's different. So this is the point is this that if you have a truncation, okay, which it is here, the difference is 1.5%. Okay. If you start the wave count from this low, what the actual low was, or you start the wave count from here, this 1.5% here will make the difference appear up on the top when you're gonna project the upside. So you always remember that. Okay. So because if I because if we do this, now if we start a wave count from here, 3 versus 1 is where? 6095. If we start a wave count from this low, this one is 6249. You see the difference? 6250 versus 6195. So when you take this, it's basically just giving you the same distance right there. You see 1.5 take from 6095 to the top. Now you take this 1.53. It's going to be the same thing. So you always have to make sure how to count your waves right. If you are going to move something, if it all depends where you start the wave count. Okay. If you're gonna start your wave count higher by making a truncation in a fifth wave, it's gonna be exactly the same distance as it the distance that you have here is gonna make the difference up here up on the top. So you can just compare side by side. I'm going everywhere, man. Here. Okay, so yeah, this is why Elliot, you don't just grab labels and just start throwing them on the chart. It needs you need to pay attention to it and you need to take a good look at it. You were talking about the other day or something about you have, I mean, I went over this thing so many times. I guess like few people, they're just too busy in their life that they cannot simply watch a simple video that they can learn something. That they're gonna ask me the same questions during the day or after hours. Just, I mean, I really don't like to repeat things over and over to people here and then two people asking me the same questions on Monday that we talked about over the weekend. Like, what is the point? Like, just fast forward, whatever, just listen to it and just make notes on a one notepad and this way you will know, like, okay, fine. Now I get that. You have two counter trend moves, okay? One, two, three, and four. You have one, three, and five is your motive wave. It's just a five-wave sequence. Two corrective waves, three motive waves. One, three, and five. These are the odd numbers. One, three, and five, right? This is an even number. Elliott wave ends here in a five-wave structure. When you have five waves up, what Nelson did, which is Ralph Nelson, he just put one higher degree label on it. Then he looks for a correction, a counter trend move that moves against the entire trend, which is called 2 versus 1. A 2 versus 1 typical retracements are what? 38.2, 50%, 61.8, and 78.6. So these are the typical retracements for wave 2 that will move against the entire trend wave from the low to the highs. Then he put this as what? As a make and made it because there's a five-wave structure here, so he made as a wave 1. Now he look for wave 2, and then from here he's looking for wave 3. Gann goes this, and he keeps going this. As long as the price is making higher highs and higher lows, okay, his swings continues with even numbers. He doesn't have any degrees where the price. This is Ralph Nelson. Elliott says five waves up makes one higher degree. You comes down in two. And then from there, he's looking for another five waves up. Uncle Gann says as swings trades in the odd numbers, trades in the direction of the main trend. So he's simply looking for higher highs and higher lows. His swing goes wrong when this swing turns, takes out the low of the prior swing. That's when he calls it a direction of the swing has changed, got changed now. The swing count is now the price has made a new low because it took out the the prior swing, which was the higher low, right? This is the way you started the swing count. You made a high here, higher low, higher high. It's supposed to be higher low, so it needs to stay above previous swing low. Now the price rolled over, made a new low. So when you come here to the wave count, you have five waves up. Elliott wave has the same thing. The wave 2 cannot trade to the origin of, to the, where you start the wave count. So the sequence between from the swing count from here to here is the same, right? So Gann is going to go the same way as well. 1, 2. Elliott is the same way. 1, 2. This 2 right there needs to find support here. Same thing. This one. Now the third wave here, okay, is the same third wave here. So when I'm hunting for trades, I'm looking for this setup here, and I'm looking for this setup here. So what does it confirm you? What is a confirmation of a trend? A confirmation of a trend is 8 swings from the low. Here, you have one. Within this one, you have 1, 2, 3, 4, 5. And then you have 6, 7, 8.
This is your 8 swings. So when I see this on this side, which I don't have to label it, I can just simply read a chart. I can just count them on top of my head. And now this 1, 2 with 8 swings on Elliott wave and this 1, 2 matches side by side. So what happens after that? We're looking for this third. Then we can just project. Okay, Elliott says what? Typical third retracement is this. And then we have this. So we're doing exactly the same thing. 1, 2. Here's your higher high. So this higher high swing that Elliott has right now, that will end up making a higher low. Now the difference is that the wave count, Elliott has way more better risk management when it compared to Gann. Okay. Why is this? Because Ralph Nelson says, like, okay, if you had this wave 1 down in 2, now we're up in 3. He says this wave 4, which is going to come here, cannot enter the territory of wave 1. Now, from here, the fourth wave has to find support, and then from here, it has to look for one final push to complete fifth wave. When it comes to Gann, he says, like, okay, this is the high swing, this is the higher low, there was the higher high, and now the price is pushing back down like this. He doesn't call the swing to turn until it take out this low. When the swing will go like this, not from here to this. This is when he says the swing trend got changed. So now the difference is between 1 and 2 when it comes to this high to low swing. Elliott wave has well defined risk management, okay, to his wave count. Gann says, like, okay, well, his swing is that as long as this swing stays above this low instead of this high on the Elliott world, the swing count is valid. And then from there, the swing turns direction to the upside. Now it goes to fifth. It can come back down, 6, 7, 8, 9, and it just continues. And I can show you swings that went up to like 11, 12, 13, 13 swings so far because it just keeps continues. So that's the difference between Elliott and Gann swings versus the wave count. The concept is pretty similar, but it's the same. But for the risk management perspective, Elliott is definitely way to go to manage risk versus you have to give a lot more time to the trade to breathe, and you just gotta have to wait for a much wider trend change confirmation when if you're in a trade. So you were talking basically for this entire second wave. This is the only difference in Elliott and Gann swings.
This entire, however this, like here you have five waves up. Here's your two waves, right? See, price went up. Right here, it took out this high right there. There you go. Then we got retracement here. Stayed above this low. You can see from here, price went up, took out this high. Price goes up, came back down, stays above this high, found support here, took out this high. Price came back, need to stay above this low, found support here, pushed up, took this high. You see the sequence goes? So what is the main basic bull trend is? Higher highs and higher lows. What is a bearish trend is? Lower highs, lower lows. That's it. Lower high, lower lows. Lower high, lower lows. It just continues to the downside. So now what happens here, price keep going up and up and up until here. So then what happened? Price rolled over. So now you mark the highs where the price has made the where the price broke above to the new highs was here. Now on the way down, anywhere you're gonna have a higher low swing, okay, that area right there will act as a support. Okay, this is your support, this is your support, this is your support. Now you start building zones. So this is one, that's your high. This high swing, this was the high swing, this is the low of this swing. So these are which wherever your high and lows are. Now you're coming back because now this is the high that you just put it up there, and now the price is gonna come back down. So all the prior swing highs that you had, okay, is just when you remember the price came back down, stayed above this low, turned back around, managed to push up higher. So when the price rolls over, these areas right there act as your support. This is your support here, that's your support here, this is your support. Now you building zones now, one after another. So these are going to be your downside zones. So now we're going to make this thing a little bit more fancy. That, okay, these are the GAN. Now if this thing stops here, now we can run our fibs. See, it's time to. I'm not looking this much down here, but I'm just looking at this high right there. You see, now you have your fibs starting to stack around here. You have 23.6, 38.2, 50%, 100%, 61.8. So we'll just look for this high right there, that whatever the high is going to be against this previous swing high. So because from the swing perspective, okay, swing is just simply the a one straight number, right? So we'll just simply mark this 5669. So we just mark the highs and the lows. I can show you here the better. Oh, that doesn't matter. On the optimum. So you just take this, put one here, and then you take this, mark this, and you mark this. Okay, so you have this. So now this is your all-time, this is the high. This is the previous swing high right there. Um, so you can just leave these levels like this according to Gann. So you're just marking up the previous, because every time when the price makes a new high on the way back, any broken resistance will act as a support. So now if you want to look more into a bit more acute entries, that's when the fibs comes. Now we can run 4 versus 2, and we can just run 4 versus 3. So if we have this support, and now we have our full fourth wave that will settle somewhere around here in this zone. And then from here now, how is this fourth wave is gonna come? We don't know that. And you know the fourth wave is just not gonna be something that you're gonna call it a simple ABC. To me, what I could say that when you have such a strong move to the upside, fourth wave minimum retracement is typically 23.6. Okay. 100 is the call 4 versus 2 is the meaning is the distance travel in wave 2, because what it is like wave 4 has a relationship with wave 2, because these are the corrective waves, 2 and 4. 1, 3, and 5 are your motive waves. So when you compare correction to a correction, not correction to a impulsive wave. So that's why 4 versus 2 is 61.8 and 100%. 100% meaning the distance travel here in 2 will be exactly the same distance travel in wave 4. That's the typical downside retracement for wave 4, the call relationship. So if you measure this 6.92, take this to this 100, 6.92. It's called, that's what the software does it. I don't have to do anything manually. I know exactly what the print is. That's what they call 4 versus 2. The 4 versus 3 are the retracement from this high to the wave 2 low, not this low. 4, a wave 4 versus 3, 3. Wave 4 versus 3. Your third wave started from here, not from here. 4 versus 2, wave 4 that we're expecting with 2. Okay, meaning the depth of this to the exact measured move of 100%. And then your stop loss, the invalidation right there. Now the wave 4 can be 23.6 on a very strong trend, can be 38.2. It can stop somewhere in between, and it can come down to 50% as well. That's it. So anywhere the price can stop here in between.
Now the question, now this is our these are the external waves that goes with 4 versus 2 and 4 versus 3. Now within this 4, we have to see like, okay, well, if it's gonna be an ABC here, something like this. So then we can just see like, okay, we need to see the first initial drop here in A. Still cannot say anything because if you do drop, price gonna rip right back up. And then from here, the price has to go back up in B, which is a typical retracement, is like 50% on a B wave. And then from here, you can just simply measure A, B, and then you can do C versus A, which is right there, 5,800. So you can just measure the distance of A projected from a B. That gives you a C versus C, of C versus A. Distance travel in A projected from B give you a 100% relationship of C versus A zigzag. Now the question, is going to be a zigzag. It could be a complex. It could be a flat. It could be a triangle. So that's a torture. Okay. It's the fourth waves are not something that is so easy, but they, because what happens is that you had a huge push to the upside, right? It's considered more like a distribution. Well, you have this is a clear accumulation phase, right? And then from there you have a distribution phase. Distribution phase is your wave 4 because this wave 4 is moving against your accumulation wave third wave. And then when this distribution ends, and then the price looking for one final push to the upside is to complete a 5-wave sequence. That's it. I mean, we've been doing this thing over and over again here. It's just nothing. 5 waves here, 3 down, 5 up. Now this is the complex here. Then another 5 up, 3 down. It's kind of very shallow, but came down to 23.6, which is right here. Another 5 waves up, 3 down, came back again at 23.6. Now, if you notice that, you see when you have a strong uptrend, you don't get a very deep retracements. So there is a very good chance the fourth wave will settle somewhere around here in between, right here. That's what I would call it, but
Mo, do you mind if I ask you a question? You posted that great chart yesterday at the end of the day, the comparison to the 2020 V shape
yeah,
and how the correction after that. Could you
I'm gonna go
could
there.
you yeah, could okay, sorry.
Yeah,
Sorry to jump
I'm
in.
gonna
Can
go
you
there.
overlay it? Is that possible? So we can see how it actually fits to this exact today because that looks like what correction was that one?
What I was looking for yesterday, guess if I still have it here. Oops. Why my mouse is just, jeez. Ah, man. I thought I saved it yesterday. Oh, right here. What I was looking for this, okay? I'm just like starting to, well, see one thing that his previous term and his new term that he just started, it's exactly the same, right? I'm just like, okay, the COVID happened in his first term, which we see right there. We're not talking about Fed stimulus and this and that. Market has plenty of liquidity right now. Okay, market doesn't need Fed help. So we're talking about what I was looking for yesterday is like how many times the market has made a V-shaped recovery, not over time, like a sharp one. Okay. And the only one that I can compare is the one in COVID, is just had a pretty strong V shape back to the new highs. Now we had the same drop here, which is I wrote it here 1.1.0 and 2.0, and we just made a same full V shape back to the upside. Now, if you look at the percentage basis, the percentage base of COVID drop was 35. This drop of 21%. Now, if you follow every indicator, and we can do it actually here as well, it actually marks exactly the same lows pretty much on all indicators. Okay. So, which we can do it here if you see the COVID low. I mean, it was actually so now if we're gonna mark this, look at the low here. Ah, geez, hang on. Grab a different tool. Look at the low here. 9. Weekly is better actually. 9, right? Toward this low. Look at the read here of this low. Weekly, I think it has better on a 5 period over this. See how close it is? Like it's way oversold RSI. Reading here and here. RSI is never gonna mark you the exact low, but just to get the read on the indicator. So the point now here is that's why I never use any any indicators. The point is here is like, okay, now we're trying to take out the high, right? Which we did, which is good. Look what happened here last time. So I sent out a tweet yesterday saying like, well, it's no guaranteed, but if I come here, I could make a case here for a fourth wave, because if this third willing to go up even more, like it did it here, we're fine. So we know that the third wave from 161.8 can go to 200 as well. So I get that. So if I would take this price action right here from 3 versus 1 from 161 to 200, and then put it here on from this high to this high, which how much is it? Let's do this way, it'll be better. So mark 5.7. So we take 5.7, and now we take this high, put 5.7, put you somewhere around this 60. So we're going to stop this. Just a comparison. 5.7. You see? It's bringing you really, really close to that 200 mark, 6,500, give or take. Here you 6,500. The point is this, that I understand that the price is making a new all-time high. Fine. Is going to make some room. It should make some room to the upside after taking out this high. Okay. Because this is going to become this is going to become a huge pivot area. So where the market usually consolidate up on a top after taking out is just when if we can get more upside, that's where we're going to measure this on day-to-day basis to see how, because you have to look at this way, your upside always should be greater than your downside. See, 21 versus 27, or actually 28. Your upside cannot be smaller in a magnitude and length compared to your downswing. I can show you the same swing. That's what these percentage matters a lot. Then, we have a price, which is fine, but each swing has the percentage as well. So which I can do it like this, and took a percentage off. You see? Weekly is gonna give you, I like weekly much better. See the price is just making higher highs, higher lows. So now I call it now for swing to turn direction, according to Gann, is this level. If the price rolls over from here to here, okay, is where we're gonna be in a fourth wave for sure. The price just has to take out the previous swing low, which is this low. So where we have our where is the support that we can find is the here. So where are we gonna build the zone? Here. We have a prior high of 61.47. This swing high, which is 60.59. Okay, now we're gonna have this zone right there. Now against any upside that might come into a play. Because you have to look at this. Let me show you the better way. Every time the swing turn direction, it'll tell you. That's why this is the best way to everywhere you see where the color is red is where the swing was down. When the swing is up, the area is going to be green. So swing was down here, right? I know where it is. I mean, I just throw those colors on them. If the price takes out this low right there, the direction of the swing will change. I can guarantee you that. So we have this high, we have this, we can grab a little box. This is our downside, so the area, the downside zone against this low. Now again, mark this. Turn this thing into red. That's it. Now, any upside from here comes into a play, fine. If the price comes back down and takes out this zone right there, the trend changes. Trend will change. Then we'll mark the high here, and now we're looking for where the price will stop.
So the point is this, when the direction of the swing is up, we only gonna look up. So don't sleep thinking, well, fourth is coming tomorrow, or we don't know that. When this swing direction will turn down, then we're gonna start looking when we will start looking for retracements. There's no point to run any retracement because you simply don't even know where the price will stop. I don't know that, neither do you. Well, this one, yes, is giving me a lot of signs that this will come into a play. And if I have to make a call, what I think is this, that market will make a bit more room to the upside. Okay. But because yesterday I was watching, see the close is at 61.73, and we even pushed lower yesterday. We came back down here to 61.32. That was like basically a full reversal yesterday. But we didn't close below 61.47. You don't want to do that. That's just not a good sign. If you poke above the previous high, and if you don't hold, meaning that if you don't close above this print, is not a good sign. It has a very, I would say, a big question mark. Is this going to become a fake out? That happens a lot. Price makes a new high and then but it closes down here. So you need to make sure the close is, I mean, it was a pretty strong close. Now we're just going to have to see if price continues to the upside, or we're just going to chop around for the whole, for the next week. But Monday being the last day of the month, I don't know, profit taking, people can light up positions. Are they going to open new positions? Because at the end of the month is when, around noontime, is when we have, a lot of positions closes, and then there's some new money comes into a board. These pension funds and, these funds, a lot of those positions get closed. Now, the JPM collar was 59.05, was right there. So they're gonna end up making not as much on their collar because the price is at all-time high now. They're gonna make money, but they're not gonna make that much money. If the price would have closed below this 59.05, the collar that they have, they would make a boatload of money. So they're basically, all those three strikes they have of the collars will expire in the money. They just went all deep in the money. So they just let that thing expire. So they had which is fine. Now we're gonna have to see if what's the new one is gonna come out, the new color. So we're gonna see how they're gonna structure that one. So I really like like we're gonna watch this, like this idea to see. I don't, if you would have asked me, I don't think that would, well, you have to understand one thing, that price is gonna take a breather. It's somewhere at some point. Unless
people are making calls right now that we're willing to go extremely parabolic. Well, that's definitely not a good sign. If you ask me, you don't want to do that. But those are the ones that doesn't end good. Okay. And because if I go back here, simply just take his two terms side by side, I mean, just compare and look, these are the perfect V. So when you go and take out this high, mm, price usually consolidates for some time. And I do expect the thing is going to happen here as well because you've taken out such a massive downside move. I mean, it continues after the fact, as you can see right there. Okay. But at the same time, these are quite a bit of wild swings, right? You look at this 10 down, 10 up, 9 down. It's just some crazy swing here, which is more or less, it was a running flat. 3 down, 3 up, 5 down. But this fifth wave low was was didn't retrace all the way back down to this low. It's called the running flat. From here, and the price starting to make a way back, move back up. Just like a three-wave correction. But that was extreme one. Can this thing happens here? It's totally possible. We're just it's the same sitting president. It's just market just doing exactly the same thing. Exactly the same thing. So I did send out a tweet yesterday. Just to you have to be a little bit open-minded, right? You can't just sit and sit like the oh this is it and I'm when I analyze price, I look at 5 different ways how I could because if you just only have one chart approach like this, say like okay, this is my wave count because this is all I know, which is fine. If you say like, well, I love Elliott, this is the only strategy that I learned over the years. I don't know anything else. Okay. Which is fine. You can do that. But I think that having a one strategy, one meaning that one dimensional approach to the market, because every chart that you're looking at, you're just looking at in the eyes of Elliott Wave because you don't know anything else because you didn't learn anything else either. When you start to put multiple strategies together, it's gonna give you a more clues like, okay, yes, because every strategy has its own way of describing price action, right? Elliott wave have rules, they have their numbering, their degrees, this and that. Fine, I have it. But I just want to look at perspective from swings, want to look at see like signals, put some conditions on them, like just kind of like you like put multiple things together. Then when you start to look at that way, it just gives you a much different I like a little different read because right now looking at the wave, like let's suppose we don't know anything else, all we're just tracking is one simple wave count. This is all we have. Okay, fine, we're in a third wave, we get that. Where does this third end? Okay, we're gonna find out when it will end. And I will just make the case here for a fourth wave. Can this third can go all the way up here? Of course it can. It's totally possible. We don't know where the price is gonna stop. But looking at here, then you just look for side by side comparison to see what market did before when it made a V shape all the way back up. What happened last time? So I did the same thing here as you just put a little more 2020 after the V-shaped recovery of the COVID lows, the market chopped at 10% range. As you can see right there. We're just going talking about the same thing for nearly 2 months before breaking higher. In 2025, we're back at the new highs. Will history rhyme? Well, there's no guarantee, but it's setup worth watching. Market will take a breather at some point. We all know that, right? There's no such a thing as going to ride forever. Market will consolidate, will come. Now, the scary part for most investors and the traders is that are you comfortable buying a 21 times earnings, 22 times earnings? Because you have to understand there's the last quarter that we had, a lot of these companies that didn't even give any kind of a guidance. So those stocks are just screaming all higher. So a lot of those, I don't, I mean, if some of these stocks which has rallied with the market without giving guidance for the last quarter, and if they end up, we'll see that what they say about this quarter, and if they're gonna give some guidance or if they lower their guidance, thinking like, yes, these tariffs will impact their business or this and that. I mean, those stocks gonna get hit hard, because those are the stocks they just have to adjust it with their, with their earnings. So, so they call those mean reversion. It's just, I mean, we're gonna try to pick the good horse, but we'll see what happens. But again, there's no guaranteed. But the point is like, is it a setup worth watching in the weeks and months ahead? Fine, we're gonna watch. We're gonna see what happens. But I just want let's see for a few couple more days, see how market respond because market just making all-time new highs. And then from here, I if you would have asked me, I think it's gonna happen just like this. I don't know about 10%, could be a 5, 6% or something. Market is gonna consolidate here for some time. So I that's what I think. Okay. It could make a bit of a room to the upside, and then we'll just do a rug pull. But I'm not doing anything until I get sell signals or something. I need because I have different strategies on a certain on a separate platform that I watch every single day. If I'm starting to see something there, yes, then I'll make the case. Okay. I watch a bunch of things, um I mean something to watch, and we have it. We're gonna see like, okay, mm, this is what we did the last time. Can we expect the same thing here? I'm gonna find out. Because this part right there, we can make a case here of this fourth wave after making a little bit more room to the upside. You see, we can do that, and because I know that this fourth wave is gonna come eventually. Is it gonna come into the earnings season? Most likely. That's how I see it. Because I don't think that all of these Mag 7s are gonna pass in a flying colors. Some of them are gonna miss. So, I mean, first we're gonna have to see like how Dow, you don't know. I mean, if some of these big names is gonna hit the sector hard and just
If I have to put a time, I mean, I'm not gonna, I mean, we can throw a time here, but there's just no point for it. We're just getting ourselves way too much ahead because we don't know where, because this can all change. I mean, yeah, just I'll do it when I see, you know, signs of a weakness. There's no point to project anything to the downside. Simply just when when the direction of the swings are up, just look up for now. Here's the thing that here's a weekly chart, right? Look at this one. A week before, what was first of all, we ended the week with an outside bar on a weekly. This is an outside bar. This is an outside bar. And this is an outside bar. These are scary bars. Keep that thing in mind. Okay. So that like 2 and 1 basically is just you see the previous week high and low. Just made a new low and a new high this week. Same thing all the way around. So now if we look at this V shape of the low, that's the low right there, April low. We only had one lower weekly bar, which is right here. So we're up for 11 weeks, up 28% from the low. Okay. And we only had this one lower weekly bar. And here comes the outside bar. The last outside bar was right here. Then the next week was the inside week. And then it went up. So if the market takes a pause, it most likely goes into an inside choppy week. And it just goes right back up. But the point is, like, this is pretty strong. 11 weeks. So we were down for 7 weeks, 21.3 from the high right there. And then from here, we rallied 11 weeks, up 28%. So the weekly swing is going to turn down. We're going to have 3 weekly lower bars. We don't have those. So weekly is a much bigger picture. Now this one is still off 12% from an all-time high. This is down 3% from an all-time high. All making V. And this one right there is up 1.35% from an all-time high, which is right there. The main chart is this. Everybody wants to fight their life over an S&P all the time. You know, this. Oh, it's in my wallet. It's on the dresser. So then, third, how I find weakness in the market from here. It's a tech driven, it is a tech driven market. There are two sectors. Okay.
has to show weakness in the market for mega growth to roll over. Okay. But NDX is going to go down, is going to drag the S&P with it. So now we're looking at here. What do we see here? The only stock that now is down for 4 days is Tesla, meaning the swing direction is down. Every other swing is up. So there's no, so at the same time, we have the, we can go back here to sectors rotation here. 1, 2, 3, 4, 5. There's 5 sectors out of 11 that are down. This run that we just had, okay, this strength that everybody is looking at, like, okay, S&P is making new all-time high, this and this, is based off tech. This rally that we just had is based off semis. Semis are the one that push NVIDIA, which is NVIDIA, of course, and Microsoft. Microsoft has a very strong correlation with semi stocks. I've been noticing this a lot. Because I know this for a very long time that Apple and Microsoft used to always hold hands and they're always trading together. Not anymore. Microsoft is just more into an AI play, is just moving, along with semis. Because Microsoft was sideways and choppy for a very long time. 'Cause right there, you see like this punishment right there, how long it took. That was what? July 5th, 2024 high until here of June of 25. This is almost like a one full year. So I want to show you this. Now watch this. Okay, we know the Qs and we know the S&P, this and this, right? So go from here, 1, 2, look where the 3 versus 1 is. You see, took out this height. I'm trying to make a room here because it's gonna try to hold this area right there for a fourth wave. See, this fourth right there is coming. Okay, you gotta be ready. So you have to be mentally ready that is gonna come. Let me show you here. Same thing here. I'm extending this one now. Okay, on NVIDIA. So we're gonna have 1, 2. So we're still here, you see, between, if I don't have this, if you just go with 3 versus 1, a 3 versus 1, 161 at 150, 200 at 167. You see? So and now if we go back here, don't what the you see, you have this fourth wave. Unless it's NVIDIA doing the same thing because it broke the new high, new all-time high from January 7th of 2025 high, which was 153.13. And now it's trying to make a room to the upside. So what I did here is, did I want to left 3 open up there toward the 200 mark, and then this within this blue 3, we just look for 1, 2, up in 3, 3 right there. Look at this, almost a textbook 200% price back. You're not gonna break two. You see 200 backed up. Yeah, you don't break 200 that easily. I always talk about this. So here's your 4 versus 2. We can pin these two, 123.6 against this. What the only way from here you can open this is to look for this extended 1, 2, 3, 4, 5 to complete this 5 series structure within this 3. So then after that we will have 1, 2, 3, 4, 5 brown off one higher degree of wave 3. And then from here is what? Fourth wave. You see, Microsoft fourth wave, QQQ fourth wave. It's gonna. I'm telling you, it's gonna come because you have a clear 3 versus 1 going to the upside in such a strong trend. We know that it can end here, can go up to 200 or whatever, but there's some stocks here that we could definitely make the case, because if we're talking about this part right there, rotation wise, Meta, XLK, look at what everything is. Not, I mean, I don't know what the fuck is this. Just look at this. Look where Apple is compared to the rest of the Mag 7. Apple and Tesla. Amazon is flat. Google had a nice pop yesterday. And then Meta is the one, still hasn't made a new all-time high either. Close. So I might have to just make a bit more room. So if this is a case here, I might have to, instead of completing fifth wave here, might have to adjust this to put a third here and then do the same fourth here and then fifth, you know? So then this will match with NVIDIA and Microsoft at the same time. So I might do that. Leave. I'll adjust it later just to put third here and then 4 and then 5. So a lot of these wave controls starting to, this is what I really like to keep them on a same page with cues. And this is the most important one right there. Remember yesterday I was saying this about this 550? It's a very, you see how market, look, yesterday high was 549.99. This one is at 550. I took a snapshot. I told them, I said, this is a sticky zone. Watch this one. You don't, I've been doing Elliott for 18 years, okay, a lot longer than you guys become even a trader. I know this fib, and you don't break 200 that easily. You guys can go up a point or two, and it's gonna back off right away. Very strong fib, 200. So it's just a matter of, I don't know. I mean, to me, if I have to make a case, I think we're gonna have a pretty bit of a choppy earning season. That's where we can see this fourth wave might come into a play. Addition to his, everyday tweets and the um these tariffs, and the war kind of cooled off. So
everything back to where it was. Yeah, he was starting to get scared over oil prices because oil shot up, and because that's just not a healthy sign for inflation, that's for sure. Oil prices up, inflation is going to go up. So I don't know. You saying there's no inflation, and Colin Powell's he's an idiot, he's a stupid, and this, he's not cutting rates. I guess that's crazy. Uh, I mean, this was your mess, okay? And we have rates which are set an all-time high, and we have a market which is set an all-time high. So this is the question that I have. What do you think is going to happen when they're going to cut rates? The market is at 21, 22 times earnings on all-time high rates. Housing market is literally dying. Nobody can even buy a house. So what do you think is going to happen when they cut the market, when they will cut the rates? September, there is like what 94% probability for a rate cut in September. September since 1976 is the worst month of the year. Keep that thing in mind. We're here. Look at July. Now we're gonna have to compare how the actual seasonality is playing out and just do it that way. There you go. This is this year, and this is since 1976 to 2025 average right there. So January was positive, February was down, technically bit of like sort of like a flat, heavy selling in March. April, that's when we were starting to recover, coming back up. So here is January right there. This this one right there is February right there. The month is on the bottom. February right there. There's no meat on the bone here, as you can see. And back to this. And here comes the March. This, which is this candle right there. Here's April, full flush down to the downside, and then end up closing here. Here's the May, and here's the June. So if June compared to July acting like this, so can we expect this here? Well, we're gonna find out. Remember, we're right there at the highs. So the point is, back to the rate cut, is here. Market is pricing in 94% probability for a rate cut in September of the worst month of the year. So that will be a fun to watch, that how market is gonna respond and where we at on the wave count and
I still got a long way to go. Where we are on the wave count and how it looks and how the treasuries is gonna um, react, how the bond market, the currency market, which is forex, how those rates on the currency will impact. I mean, it's gonna be a wild session. I can tell you that for sure. The first rate cut. I think I don't know because everybody his approach is this that to cut rates is going to boost the market eventually. Yeah, it does. I mean, that's what we did back in COVID, but now we're just cutting rates on a market which is already sitting at an all-time high. So as an investor, okay, or as a trader, well, rates isn't really because we're just trading price, right? But if you are looking to spread cash around in a different asset class, yeah, that's where the rate impacts, like, especially these banks because they're deposits and stuff and they're just going out buying bonds. Well, they're paying, big price for it. And when the price will, they lock themselves up for the certain maturity, this and that. But yeah, the cutting rates is gonna shake a lot of things out. I mean, it could boost, give you a bit of a fake out, could be a reversal, but I don't know. We still got a long way to go. Can't just sit and think what's going to happen. I just want to worry about how we're going to trade next week or worry about September when September will come. Need to sit and make these kind of bold calls. Just track certain things and just go from there. Here's a interesting part for you to watch. On a quarterly basis, we have two outside bars now. Didn't just kind of looking at them um, over the quarters. These are 3 months bar. Keep that thing as like long time. But this is um, I watch um, when the quarter ends. I mean, the only time that I find it here, as you can see, that we have two side by side quarter, meaning that we have two outside bars, then the next one end up being higher, but was a bit more volatile quarter that end up being flat. Same thing here. We had next quarter was up, but 120 to 132 was just a 12 point for the whole quarter range. This one was 132 to 156. So you have a bit more price action here on this side. So, this is how you look for they call bar to bar relationship. So it's very rare because that's all. I mean, and now we're back here, the same exact spot with two outside bars side by side. I just, I just don't. I mean, I could be wrong, but I don't think that. I think it's this year it's just gonna close flat. That's how I see it. It could make a room to the upside, but just gonna eventually just gonna sell off. I'm talking about closing September. I'm sorry, December. That's still a long way to go. I just I don't see a double digit rally. Not no. We had two in a row. It's gonna be a flat something like something like this, you know? Oh, we still got another. This one is gonna close. Um, oh, we still have. Oh, we still have 2 more months to go. No, January, February, March. God, I can't even think of January, February, March, April, May, June. Yeah. Oh no, sorry. Yeah, it's gonna end June. Yeah, we're in June. Ugh. So July, September, October is gonna be a third quarter. So it's gonna open up a new quarterly bar. So we have this on the cues. Everybody. So now if you look at this, that since 2022 low, okay, that's where we have these 3 quarters down in a row. We haven't had a single lower quarterly bar since 2022 low, October 2022 low. That was the bear market, remember? Under Biden. And then ever since we've been up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 quarters so far. It was a lower bar before for this, uh, but now it ended up, you know, going to new all-time highs. So of course it is. So it engulf. Look at Sammy's double. Very interesting price action. Use back-to-back outside bars in a quarter. Transports are struggling. Transport might go, it's up there. Yeah, because transport already has two lower bars and it came way back up. Yeah, you want to save this swing, make sure the third stays up. IWM, 2 down quarters. That's why it's still sitting negative, 2.48 for the year. And then we have Dow, same thing, two lower quarterly bars. You see the difference between like how this market is so kind of like divided? Look, double, semis double, Qs double. That's where all the big money is. That's why everybody chasing this. When you come here to transport this, this. This market is all about tech and semis. That's it. There are few names that you could definitely consider and play, but the rest is just so big names. They're all in those and Qs. That's okay. Look at the other sectors. XLY, two quarterly lower, two down. Healthcare, swing is down for 3 quarters in a row. That's why healthcare is so terrible. You know, it's a tough one to fight. The huge lower bar ended a quarter with the inside. Now I got another lower, and it's still here. It's not even close up till here that thinking like, okay, fine, we can expect a one positive quarter on healthcare. But if you look at them, just I mean, it's down 2.65%, but this is I mean, I the only stock that I like is Eli Lilly. That's it. I'm not AbbVie. I like Amgen. I do. Amgen got hit hard with those some sort of news came out on their drug prices. These are the few names. Merck, I do like Merck. I traded Merck a few times as well. So it's a kind of weak, low grind kind of stuff. It doesn't. It's not a very high ATR play. Just put it this way. Not a lot of alpha that you can find on a stock which trades at a $80 price tag. Um, Utilities, real estate, dying. So we have a healthcare and real estate, consumer staples, dying for like 4 quarters, almost a year now. Call it right. 4 quarter makes 1 year. Since this high right there, it just literally just went sideways. Tech, double outside bars, industrial. Look at this outside bar. It's the strongest sector right now in the market. It's even leading the tech as well. Financials down. Financials actually got the first lower bar since October 2022 low. You see right there. Energy down. It's just in no man's land. I know the energy popped on those news, but at the same time, I was like not that excited about it. Um, Not that excited. I mean, I know if you just want to play a short-term swing, fine, but I just, yeah, I just, Trump is not going to let the energy move too much. I can tell you that. High energy prices, inflation is back on the board. And just mark, just that's the thing you can just communication outside bar. Think they didn't have we didn't have a single lower bar since October 2022 low either. This is where you have your Meta and Google and Netflix material down. So I'm saying like materials, real estate, healthcare, utilities, um, energy. They just I'm absolutely not interested in these stocks at all. Material, energy, real estate, utilities, and healthcare. Okay. The only sector that you don't look at this. Now let's go back here to a weekly time frame on RRG. Okay, got healthcare. Here's your energy. That's what I'm saying. This spike that energy had, it's just look at the real estate, material. It will give us a chance, but not when they're pointing like this. Financials are coming down as well. Financials, I know what the Goldman Sachs is all-time high. Look at utilities, consumer staples, and you have an S&P sitting an all-time record, all-time high. I just, I'm, it's such a mixed picture. You see, when you start looking things across the board, And then you say like, again, I know market is a lot smarter than me. What do I know? But this is just the whole new level. What is leading right there. Need to pick up a couple more names here. Okay. This. I mean, this is trying to turn around now, as you see. So there we have Google, which we own it. And we have a Meta and we have Netflix. So the only sector in the coming weeks that we could focus on is this. I'll pick up some names here. Now, I don't see anything here yet. Because if we add some of those big names, that's just the best way to find the Lily here. See? You just take the top one, two holdings of that sector, it's gonna follow the sector. That's what drives the sector, which is this just most people don't understand. It's just the overall weight. When this turns, that's what you know, it's gonna lift the sector up. The sector is not gonna go up with some random biotech, whatever, small pharma company. The one which has the most weight is the one is gonna lift the sector up. You see? Now let me show you. See? Exxon Mobil Energy. You take the top holding of the sector, it's gonna just it works, it rotates exactly with the sector. And if I will pick something that has like a 0.5% overweight, it's going to be somewhere around here. So when you're making a bet, when I'm willing to make a bet, when I make a bet, I make the bet on the top names. Why? Because that's the one that's going to drive the sector up if it's going to gain strength. So I want to trade the leader. I don't want to trade some rat. So that's where I'm going to have the most alpha to go with the top name. Now, if you, what is that? I showed you guys this website. This. I don't know. Some of you has ever looked at them, spent some time. Not. I mean, I don't know. But instead of sitting chasing prices left and right, I highly recommend you to learn things more than sitting and trading all the time. Study this, spend a lot of time over the weekends in the coming days, make some notes. Just an excellent website. It has app, the iPhone app as well. You can download this app right there. SPDRs. Love this website. I have this website up all the time. Just gives you such a um, the information is just excellent. Your communications, your last price change, this, that, you can just all do, you can do quarterly, 1 month, year. I mean, I can run all this and optimize as well. It's not a problem. 3 years, 5 years, 10 years, all each sectors. I mean, this is what drives the S&P is these 11 sectors. So if I want to go here to a healthcare, want to go to their holdings, as in Eli Lilly, 12.55. So I want to, if I want to, like, here's Amgen, 3%. See, 3. Look at the difference. It's not like that you cannot trade this stock. You can, of course. I mean, trade is a trade. But I much rather make a bet here versus any of these names if I'm long or if I want to play a sector. That's why I always have the list, the one I mess this thing up. Here is this 50 stocks. Every single day I post this thing, right? To you guys, probably like what, 2, 3 times a day. These are the 50 top names. Why? Because these are the ones that moves the sector, especially the top ones. I mean, yeah, the AbbVie's in the healthcare, J&J is in there. So if you just go back here to the list, these are 50 stocks. So it covered all 11 sectors. Okay. You got Apple, all of them. I don't know how to name it. You can see them all here. So here's a Lilly right there. Meta, Microsoft, Netflix, Nvidia, Oracle, Pepsi. So it has like these 50 will have all 11 sectors in there. So now if we just go back to any other holdings, I want to go to the XLY, which is the consumer discretionary, there, Amazon and Tesla, Home Depot, Booking.com, McDonald's. McDonald's getting hit hard. Um, TJX, Lowe's, Starbucks, Nike, and DoorDash. This is pretty kind of little interesting company, to be honest. I don't know what their DoorDash actually some crazy swing. I looked at them a couple days ago. I was like, their business is doing really that well. Look at 155 to 242. You see what happens here? Look at this swing. See? I've seen thousands and thousands of breakouts in my life. Okay. And just wait a couple more days, we're gonna find out. You don't just slice through and keep going up north. Mm-mm. What's that?
Lando first, Leclerc second, Piastri third.
Oh, nice.
Yeah.
Good. We'll watch later. So here's this. Well, we'll see. What I was gonna, yeah, I'm telling you, like, spend time on this website, educate yourself, learn about these sectors, focus on the top holdings. If you're willing to make a bet, try to pick the leaders, you know? So it's like if you go to XLK, what, NVIDIA, Microsoft, Apple, Broadcom, Oracle. Oh, Palantir took a pretty dumb, I don't know what happened to Palantir yesterday. I think the guy, yeah, backed up. Nothing really bad. Make 1, 2, 7. You see, here's your 3-wave decline. See this? Look how many times you came back and just keep retesting this before you got this. Watch this area. We're gonna have a lot of fun here for a while, back and forth, before you're gonna make any more room to the upside. You just wait how many times you're gonna retest 40, 61, 47. We already did it yesterday once. We made a new high, faded yesterday, back to the 61.47 right after breaking out. So we only did one so far since yesterday. Watch how many times you're gonna test this. I can show you the same. You just all you have to do is just to look for a 3-wave swing, and then you have to look for a price that made back to the new highs, meaning that it backs back to the previous swing high, and see what price did. Simple as that. Yeah, Palantir might be. If I go with the 1 to 1, 100% is here. Well, a little tricky one. Hang on. Yes. 3 little bit short. Oops. 4-point shorts. There's no other way. You gotta count 5. 1, 2, I got 5 here within this 3. That's a crazy little low. 1, 1, 2. I do it here, not make much. God, I hate this. Okay, now it's much better. You don't go, I have to do it manually. You can just do it something like this. Auto sometimes gonna draw some funny looking lines. So you can do, okay, there's 3. Now this one right there, you don't have 5 unless you have to do this. If you do this now the third is shorter than 100, it's not gonna work. This is a little tricky. It actually fits here, right? Not here. It becomes the shortest wave. Third cannot be the shortest wave. To make a 1. Okay. There you go. Now we can do it much better. Gonna fix it one way or another, just gonna have to take a little bit of time to read the price, right? Okay, this is your 1. What is this? Here's your 2. Right, that 50%, fine. Here's your diagonal within that 1. You can make this thing as a complex, really doesn't matter like this. Doesn't matter. This one way up, but you put two here, it doesn't make a difference. I can make a little bit of a, what's going on? Imagine this doing in the middle of a session. I'll kill myself wasting this much time. Um, Sitting and thinking like, where do I put my 1, 2? 2 versus 1 is good. See, now it's shaping up. Oh, wider. Three is good. You can put 5 here. So I got 1, 2, 3. I think I want to go back to the black layout. This white is just not helping me with the labels. It's your 50% retracement, 4 versus 3. Is your third. Some sort of a complex 3-3-3 pattern right there. Do this, turn this thing to a diagonal, something like this. That's your 3 here. So you got WXY. Correction this. And then from here, that's a little bit bigger than, it's okay. Can make a flat here, it's okay. 4 versus 1. 4 versus 2. You see, it's very close to this. Yeah, this is a diagonal reversal here that we it's also 127, which is fine. Yeah, it looks like has a pretty sharp reversal. Yeah, it's coming right back to 125 to come back down, retest it again. If we go back to the bigger time frame, 1, 2, ooh, third, 161.8, 4. This is all a fifth. Oops, I was just looking for some. This complete. If this is the case, if this is all of the fifth wave compared to this one from this $5.84, this 5-wave structure completes here. The only way to open more room to the upside is to either extend this thing, the fifth wave. Okay, hang on, let me do. So we have 3 versus 1 and 161.8 from 5.84. So here's your wave 1 down 2 up in 3. Your fourth wave was right here between 23.6, 38.2, kind of settled right in between the center. And now if we will run 5 versus 1, see we have room. See 5 versus 1. So I would adjust this thing from this low to make some room. This is like the distance travel here in 5 versus 1, meaning this fifth wave from 584 to whatever, $20 is the same distance from 66 to 269. So they both will be the same size. They call 5 versus 1. This is a typical fifth wave relationship. Let me see for a second. See, this is where it stopped at 127 extension. Let's see how many. No. Yeah, you need to stack multiple green ones together. Yeah, nothing coming up here on green. That's way up there. That's a 5 versus 3 versus 1. Need to open this one. Come on. Motive wave magic. That's the one I was looking for. Okay. 161 point. I don't need this. So 127. It's all about this fifth wave from here. So yeah, we just gonna have to go back to a smaller time frame. This is, we can start either from here. I mean, 5 versus 1 is to leave this much room to the upside. Hang on for a second. Oh boy. Yeah, swing is down, of course. Let's see above this low. Yeah, it is. 1, 2, 3, 4, 5, 6, almost 7. So one single bar took out almost 7 previous day lows. Wow. Any news or something here? Okay. There you go. That's a 1-2 swing. It's pulling back in a second swing now. Yeah, then I have to make some room. I have to definitely I need to rework this thing from here. Just do it. I have to move this one up. If this is a case, I have to match this thing side by side and just go like this. Make a 1-2 count. So this is all of 1, which makes sense.
A 1-2 kind of makes more sense. This is Palantir is being talked about as one of the leaders to join the $1 trillion club in
Do what
future.
thing?
To join the $1 trillion club market cap. It's one of the front runners in that group.
Yeah.
Yeah, you know, like, and on that trip when Trump went to UAE and all the top people were there, the CEO of Palantir was there.
Yeah, I would just.
He's hooked in with government.
Oh, they're collecting all the data. Um, whatever the.
And just a side note for everyone,
Hmm?
a financial advisor that someone in my family uses, they bought the stock like a month ago for the portfolio. So they see it, with long-term growth.
Yeah, I mean, if we go back with the swings here, okay, this is the one, and now we're pulling back in two. So I mean, it's this is the second swing that is in play now, but the swing is down now. And once the second swing settles, then we'll look for a third to the upside. Yes, there is a bullish case, there's no doubt. Okay, so if we look at the view here to see now the swing is down. So we just gotta watch and see. Let's see the RRG on this one. Yeah, see, it's starting to cool off now. So if we go, I mean, change the ticker here because see, it's starting to lose bit of because after yesterday's sell-off. Let's see what the weekly looks like. See, yeah, this. So now we take this RRG. See, it's starting to show you signs because after this, the rotation is going to come into a play. So let me see if it got. No sell signal either, except here. That was the last one. Nothing here. That's a good buy signal, huh? I don't know. I mean, I don't even. I know. I don't think I've ever traded Palantir, to be honest. Some of you asked me for it. Some of the trades that we have open. Okay, this is the one that we have open. Service now. It's gonna be okay. They just these 2 days we got the I took a trade, just a buy signal triggered here and just to give some time and see if we can try to break above this channel breakout. That's 1,034 here and then 1,046. This is a zone we just need to break. If we can manage to break this, I think it will. I think it will. And we can definitely, then I can project the upside from here. So this is service now. We have Google is fine. Google is good. I have this wave count here on the Google anyway, so right here. Yeah. I mean, it's a clear diagonal. 1, 2, 3, 4 with the overlap 5. So very clean diagonal. After diagonal, you always get a three-way move back. Your prior downside is always going to be a prior fourth wave. Okay. And I have shares that that we bought 165. And from from 165, I was like, because once you're starting to see, because when you take this kind of a hit and then you're starting to chop around with it, it's like it's gonna turn into it. I like Google. You know how many times I talk about Google all the time. This is a It's a cash cow, trust me. Um, so I buy shares at 165. 165, like 20 is my cost, give or take. And came back, see, went up, gave back everything, then went back up. I was like, okay, I just gotta give some time. We'll see how it's gonna play out. And then came back, retest, back to 165 to the flat line. And that's what I was like, okay, 165. I was like, okay, that's a good entry point now because it's your prior fourth wave anyways. And then it came back down here and I got another buy signal. That's when I was like, you know what, let's add another leap on it. I got the 65 shares with the leap working. So now what the plan is. The plan is this. So we have 5 and 3. What we need to do, what we look for is we need to break 181.10, meaning that we need to take out the previous high. If we do that, the 78.6% retracement from the peak to trough decline, which is from 207 down to 140, is at 190. So if we're going to break this, there's a very good chance we're going to go back and retest this 78.6. That's going to be a hurdle. Okay, keep that in mind. You don't just slice through 78.6. Either it makes its way to in the next couple days or whatever, if there's 6.5% upside. Google right now, 6.5 upside there. Google's sitting 5.69 down year to date. So that basically put Google at the flat line, right? At this price. Basically, just the break even for the year to date. After all of this whipsaws back and forth, throughout the whole year. So there's an open gap here as well, as you notice, right here and here. That needs to get filled at some point at 192 and 204. 78.6 at 190. Now, if we take a measured move, but first we need to see if we can break this high. So we're just gonna take 5 up in 1, down in 2, just simply project 100% relationship. I want to go that far for now. It's a 208. Okay. I think Google has upside. Got plenty of time. I'm not worried about. I have no problem holding this stock. It can back off. I'm okay with that. I'll just gotta have to be patient. You got an open gap here. The only thing we're gonna watch is to see if the Google can make a higher high, meaning it needs to take out the 181.10, and then see if you can make a room toward this 190. 190, that's when you're gonna have 192. The gap is gonna start to come into a play. So I don't know, because we're still gonna have a second wave here. If we're doing this, okay. So because within this 3 green, we need to find 5 smaller waves anyways. So from here, if we're working off on this will come. Okay. So that would move against this low. So I don't know. I don't like 1, 2, kind of 3, 4, whatever we can do here. I just don't want to. I'm just don't want to waste my time on these smaller waves. I'd rather just um, focus on where the price, what the previous swing high, lows, project the upside. Just keep it simple. It's much better, much easy to read a chart, to understand the chart, So, so we're just gonna watch this. Um, what else we did? Google is fine. MSTR. I took this signal as well. Kind of all over the place. It just hasn't, it's not really moving much. I know it's just kind of annoying, especially being in a position to just kind of stay sideways. I mean, if you look at them here, like look at all these 3, 6, 9, 12, like 13, 14 days, just stock just literally sideways. It kind of makes sense because you look at the upside from here. You see, it's just price just kind of a little sideways. So 430 is the high here. Here you have a 338. It's a 1-2 swing. Okay. Two is in. It's just a matter of getting to a third. Um, and yesterday I was looking at those daily fibs that I tracked, like 390, 397.99 was like literally to the penny yesterday. If you look at them, so the snapshot I think I did on yeah, this look at that yesterday high. 397.99 to this. Crazy. It works really good with fibs though. I'll give credit. I'll give that credit. This is where the resistance is, right here. Here. You see why? Because you see how big of a swing you have to the downside. This 404. It's just so, so the this 25, 26 points, okay, is what it needs to break this area. This is the resistance, okay? And you have this high. So you have 404, 430 against this 358. It's just range. We can do it this way. Here. Let's change this thing to this. And then you can just turn this to this. There you go. That's your two zones, up and down. We're willing to make a bet that we will go this. That's it. Okay, so you just, if you want to draw your fibs and stuff, fine, you can do that, but it's gonna, your price is gonna settle here one way or another. So these are your, I mean, if we are bid on a surprise, then this two will extend, meaning that this two will take another leg down. But looking at the price, it's a little very choppy. I label this thing here as well. So it's the same thing, making a triple combo. 100% relationship is there. I mean, just it's looking kind of promising. It's out of the channel as well. So it needs to find a way to push to this 430 right there, 430. This. I'm just gonna wait and see what happens. Okay. Uh, what else do we have? Open this one. Slightly moving. I'm looking for this break. So I'll give some time, see how it plays out. We're up for like 5 days in a row this week. See all of these higher bars every day. It doesn't. It's not a very big, huge mover, but if once it breaks this 97, then we can do just a simple fib extension. You can just simply take this high to this low. So you can just look for one or two. That's your 100% equal measured move. We can do that. And then this 106, 110. I like I like this one. Why don't they be open? Just going over the position just to see. Yeah, I did CDW yesterday. Here. This one, I like this. If we can make a room, I think it will go. Just to see if we can get to this 192 first. It's at a 9 swing. It's very high. It needs to take out one of the swing high. Okay, so I like this. So I've been watching this. So like I know it's coming back down here. So like let's see if I mean it's out of the channel. It's a good sign. It's just now he just has to kind of make his way up. So I bought some shares yesterday on this one. If I go here, RRG looks good. See, it's very nice. Nice alpha away, way far from the benchmark as well. So this is the bet I'm willing to make. Setup looks good. Signal is in. Um, and just to see if we can get to this 192. So I start putting these, if you noticed yesterday, you see, I think I'm gonna start using these ones more. It just I kind of adjust this one yesterday. You see, like I grab this, click right there, see where you wanna, if the swing is up, take the low, couple lows down here. That's your entry, project the upside. That's it. That's your trade. That's your channel breakout. We can do this way and then just wait for the price to work his way up. All we're trying to do is to see if we can get to this swing 8 high, which is this 192, and see if the price, as long as the swing is up, you can just take 1, 2, 3. I would take 3 bars. So So if it's a 3-bar swing change, you just count 3 bars for a stop, basically. So we got 1, 2, 1, 2, 3, right there. So this low against this high. That's it. That's the trade. Not bad. Simple. Look for patterns, signals. If it's a channel breakout, that's the trade. I mean, what else you want to do? And now you just gotta wait. you know. I think it's a much cleaner way to trade, to be honest. To how fast I can do it. Like, just run a scan, see how the RG looks, if we can, this is, I think it's a clean way um do this. Nike already done P card, MSTR. Here was the another. Been working out. Broadcom, my favorite company. It's Thanks to you for this fourth wave. Same. I kind of like um Elliott wave, especially now that there are so many of these stocks that are starting to match. There's sometimes like one is on one direction, other one is going to the other side. It's like, what the heck? You wanna bring them as close as possible. This way, then when you have the broader weakness, let's say in the picture on the market, you kind of see like think, you can make the case of a fourth wave. So it's going to be eventually due here as well. I took some money off on this one. I still have shares left. So if this thing rolls over here, and if I will catch another buy signal on this one, I'm gonna add another leap. So got a much lower entry on this one, which I own it for. What's the entry and yeah, 195.95. That's the entry. Yeah. Oh, when I sold half. I just mark these. I usually mark them and then I sold 261.38 here. Right to this. So uh, I think it's blue. God, I gotta go back to my black screen, man. I can hate because all these colors got changed. They just have to change these colors over and over again. So with the black background, I have these colors all saved with that background. Anyhow, it doesn't matter. So I mean, if it can make move higher, fine, but then we'll just deal with this one. Look at that, man. Broadcom works so good. Ugh, with fibs. Beautiful. Love this company. That's what the 3 versus 1 is. 161, 200, 200. And it doesn't matter. So whenever this triggers, we'll add a leap against these shares right there. Okay. Amazon we had a, it's flat. So it's just breaking out this 78.6 now. I wouldn't do this. Hang on. So you got 1, 2, 1, 2. Hang on. You see, it went up to 78.6 from this high to this low. Yeah, so I'm really hoping Google will do the same thing. Google just needs to break that 181. That's the 3 versus 1. Okay. 1, 2, 3. I count 5 within this 3. So the same thing, 3 versus 1, 218, 229, 78.6 from this high to this low. And then it's gonna put you right back to this fourth wave as well. Tell me this fourth wave is gonna say 1, 2, 3. Yeah. I don't know. I mean, it's an I really, you can, I mean, no. Okay, good. 3 versus 1, 200 back off, 50% retracement, 4 versus 3. Yeah. Oh yeah, shorter one, definitely have an extended fifth wave. Yeah, when you have a shorter wave one, you get an extended fifth wave. If you have an extended wave one, you can have a shorter fifth wave. Just remember that. Okay, so the distance that we look for normally. So if you have a short one, you have a longer fifth wave. Okay. If you have an extended one, then you have a shorter fifth wave. How far does it go? Fifth wave, if it's going to be a shorter, 61.8% of 5 versus 1. We normally look for a 100% relationship of 5 versus 1, remember? Meaning the distance traveled in 1 equal to the same distance traveled in 4. So look at 100%. But when you have an extended 1, you have a shorter fifth wave. Shorter fifth wave usually ends right here, 61.8. That will complete 5-wave sequence. When you have a leading diagonal in a wave 1, then you have 2, then you have 3, then you have 4. When you have a diagonal in 1, you're going to have a extended fifth wave. Okay? Must be a diagonal. If you have a diagonal here, you're going to have an extended fifth wave. Or a diagonal will meet with another diagonal in the end. Meaning 1 here, 2 here, 3, 4, and then 5th. Okay? It's either an extended or a diagonal. Like this. This one. See? Diagonal here, diagonal here. It was looking very promising for an extended fifth wave, as you can see, which is fine. But this is, you have diagonal in one, you can have an extended fifth wave. I can show you thousands of wave counts. One diagonal, extended fifth wave, meaning that it will be like this, 5 wave, or like this. And then from, if you have as a diagonal, then you got the sharp reversal lower. A diagonal reversal really sharp. These ones, leading diagonal that forms on the wave 1 or an A, always come back and retest this prior fourth wave. This is your minimum downside retracement for any diagonals, prior fourth wave. So, God, what's going on with my mouse, man? So we go back here. See, price came back, retest this prior fourth wave. Diagonals starts at wave 2. Okay. So we have 3 wave. Now it can do, anything can happen. So let's say this is all of A, this is some sort of a B, and then it takes another C. So this 2 will come here. That's possible as well. So you have 5 waves up. So this is a 3, 3, and 5. So, or if we break this, then we will confirm this wave 2 low is in. The price needs to make a higher high first to confirm that low. You cannot confirm anything until the price makes a higher swing. You need the higher swing. You know, as long as the price stays below 181.10, you always be a little bit of open-minded thinking like, well, price can reverse. Price has not taken out the 181 80 high yet. We need the swing to move up. Then from there, like, okay, fine, now the price will start moving up. This area right there will act as a pretty good support if it's going to start to make some room to the upside. So we'll watch. Doesn't matter if it's going to roll over like that. I'll buy another one. I'm going to keep loading Google. Every 10-minute, 10 point something, buy one more leap. Tesla. It's the only stock right now with a downswing. It's pretty pathetic, to be honest. The question now is, what is the wave? I don't know. Take a start from 273.21 low. I mean, it's just a clear 5-way move. Okay. The previous high was 367.71, and technically the price supposed to make a higher high, but it did not, as you can see there. It failed here, and then here comes a European sales surprise, and then the market sold. That's your robotaxi, and that's your European sales. Now, if we had a 5-way move to the upside from here, so now the question is it some sort of a 3-way move? I don't know, make it WXY, whatever you want to do, it doesn't matter. All we're looking for is 2 versus 1. 38.2, 50% retracement, and 61.8. Typically, wave 2 finds support somewhere around here, okay, between this or this. I had a little bit of a doubt because you have to understand one thing. Triangles only forms in wave 5. I'm sorry, in wave 4. In a whole trend wave. Wave 4 can be a flat, can be a zigzag, can be a triangle. But triangle is the only pattern in the wave structure that only forms in wave 4. When you have wave 4, you get a one final they call post triangle thrust in a fifth wave to complete a 5-way move. So you have one higher degree 5-wave completed move. Now the question is, once you have 5 completed wave move, what happens? Now you look for a counter trend move that moves against this trend move, right? One against this 5-way move, sorry. So you got 1, 2, 3, 4, 5. So now is this is all of some sort of an ABC or WXY, or I think I'm gonna move up, or we do something like this. In this case is, I don't know, count 5, look for some sort of a B-way bounce back toward this area, then take another leg down, and then from there you can, price can make his way, move back up. But the the thing is this. Watch this. See the swing turn down yesterday. Oh, I had my, that's what I was looking for. Let's see, I have to change this thing. Hang on, I'll open it here. Watch this, this print. I can show it on a weekly as well. Look what the price is doing here at this 335 mark. See, look at the high here, backed off here. You know why is that? It's because of this. This is the midpoint. From the 488 to 182 low. So 52 weeks high to 52 weeks low is 335 is the midpoint. So this area just starting to me looks like it just keep Tesla just making up his mind here now, right here. I mean, I look at, like if you look at daily, just look at the high here, 335. See? It's a lot going on at this number, because this is the mid. Any move that happens between a 52 weeks high and a 52 weeks low is from the midpoint. So just keep that thing in mind. You see the price came back down here toward this bounce. Now I took a leg lower. But the point is like that any time that the price does go and make a full swing down, that's when you look for the mean reversion. So the price comes right back to that 335 mark. Now look from here all the way across. So remember this 335 number as long as this high is in. You will see how many times the price is going to keep coming back to this 335 number over and over again. Because market has from here, okay, is the price, the fundamental, the price has to make a move from here back to this 52 weeks high. This is your mid. Every time when you're going to come back down, you're going to come right back up to retest this 335 again. I can show you that, but when, how fast, how soon, well, I don't know that. I don't know that part. Price will come back to the mean, that's what they call the mean reversion. It's a very powerful screen. Jeez. This one laid out exactly everything. See, Tesla is up 8.11% from the 200. This one is down 6%. Up 11, 5, 12. 52 weeks high is this. 52 weeks low is this. This is a midpoint. Exact volume. NVIDIA is up 5 days in a row. Netflix 2. MAG's ETF is up 5 days in a row. Google is up for 4 days in a row. Amazon 2, 1. See, Tesla is down 4 days in a row now. That's crazy. So do this. Okay. Down this 4. It's gonna match. So what is their Tesla longest? This is the 4th. Right there. And 6 is the longest losing streak for Tesla. Then this is 5. So we have 4 now. This is 5, and then that's 6. So a fun stock to trade, but it's gonna torture the hell out of everyone, to be honest. It's just robotaxi rug pull. Now it's gonna catch everyone here to the downside. Then it's gonna do another rug pull to the upside. Watch. It's just the way it is. It's just the way the stock trades. I did this one. If you here. This is the from this high, which is the 414. Okay, it's the prior high, right? And from 414, then I did down to 164. I mean, it's just way down here. The point for this is that if you buy either shares, I'm just calculating from here down to this. Okay, it's plenty. If you buy 1, 1, 1, 1, and 1, if you buy a leap, meaning a spread, on these prices, there is absolutely not a single chance you end up losing money. This is not, I'm talking about like buying for like 6 months or 7 months. This I'm talking about buying more than a year out on leap. Spreads. Because you're gonna go, out so much on time, you'd rather just do spreads. You have not lost any single trade. I mean, the trade can take a month, month and a half, 2 months for that to play out, but it either is gonna end up paying you something or you just get out. So you're right here now between these two, 364 and 314. So how you buy this? So right now at 322, near here. Okay. So if you start at 322, then you just have to adjust 50 down 3 different levels. Okay. So let's say if you want to buy it on Monday. So what you're doing is that you buying 50 wide spread from the current price if you want to go long Tesla, and you making 25 widespread leap to the upside. 50 wide spread. Okay. Because what happens is when you're gonna buy, let's say you bought something at 364, you waiting, and all of a sudden the price came back and dipped down to 314. If you pick another leap here, now your adjusted cost is right here in the middle. Okay, yeah, price under pressure, this and this, fine. The price can come back down a little bit here. That's just not the point. You have all the time in the world now because you went out more than a year. So if you're right here and the price eventually makes a way back up toward 364, you're making money now. If it goes back to 214, there you go. So you just chase the same print. Basically what you're looking for, you're just looking for a 50-50 up to the upside and 50 looking to the downside. So that's that part. For you to structure a trade, you just have to make a 25-point spread higher for a leap. So if the price is at 325, you make a spread of 350 and 375 on the price if the price is at 322. So now if the price, let's say, come back down to 300, so you go out on a time, you make a leap at 325, 350. So you're making a spread of 25 wide to the upside, but you're buying 50 wide spread. I've done the whole math. I'm just trying to explain you exactly what all these numbers are. So you buying 50 wide spread because from 150, sorry, from one level down to this is a 50-point wide, it's not 22. So from 350, just giving you an example, down to 300 is a 50-point wide spread. You don't buy or do anything in the middle. You bought something at 350, you just wait for it because now you have a spread open for 375 and 400. Because price was at 350, you bought 375, 400 wide spread. Now, if the price takes a hit, comes back down to 300, okay? So now what you're gonna do, well, of course, this spread is definitely gonna be down, right? So you bought one, 375, 400. Now you're waiting for this price to see if the price has a weakness, comes down to 300. Now your adjusted cost here is going to become 325. Then you bought another leap of 350. Sorry, yeah, so you're 300. So you basically do 325 and 350. So now the price came back and test the 300. It can go down to 299, can come down to 297. 2, 3, 4 point doesn't make a big difference. Okay. Now these leaps right there that you're buying, which is more than a year out on time, has no time decay. You simply hold in premiums. It doesn't cost you anything. So you have one here at 375 by 400. Then the price dipped down at 50, right? On the wide spread, you made 325, 350. Now you have a 25 wide point wide spread working against a 50 point wide drop. I mean, sooner or later, sooner or later, Tesla's going to make a mean reversion back. Oh, what is it here? Look at this. I didn't do it. We can do another 50 from here. Look from here. Every single time, how many times, even if if you just draw yourself, imagine these positions across, meaning that you just went 25 points between each of these green levels from the top to bottom. There is not a chance you're gonna tell me that you didn't make money. Either from here down to here, and if you bought these two here, if let's say you had one here, right, and the price came all the way back down here, but you bought yourself these two, you still get out with something. Yeah, these ones still gonna be a loser because you're sitting way up here up on the top, but these two, the one has to do the work for you. You can extend the time out as much as you can. All you're doing is making a 25 point wide spread anyways. You can just consider 1, 2, 3, depends how many deltas you want to carry. You can do a 15 point wide delta trade. You can do a 20 point wide delta trade. You can just let that thing work. And then because you have to understand this, that everybody, I know everybody's fighting their life over it. Look at this, just price action. What is this stock doing actually from the last 4 years? Literally nothing. It's gonna be a $5 trillion company. It's just the fundamental story on this stock just does not fit right. It's very hard to make the case. I love to make a case of this, to be honest. This. I have it right here. Go as a 1-2-1-2. Here's your sideways triangulation here. 5 waves up, triple combination down, and now we're looking for a 1, 2, 3, 4, 5. I'll love to make a case for this. Down to 4, back to this 488, 575. But fucking sales and all this BS, I have it. If it eventually plays out, fine. It's a weekly wave count anyways. It's a 1 weekly bar. It's gonna take a very long time. But it's just I mean, if Tesla really gonna make a move by December, okay? I mean, if this holds the way it is, I mean, it's 575 is a 100% time relationship by December 7th of 2025. I have it here for now, which is this. So basically a measured move from one projected from this low to see if we can get to 100. So I have that, but 575 price tag is 77% upside. Of course, it's Tesla. Anything is possible. This thing runs it, then there is no stopping for this stock. It's not gonna give nobody any chance to get in it. Then it's just a wild stock, you know. But without earnings, no guidance, 5 quarters in a row with the weaker European sales, Now China is trying to eat their lunch with their cheaper version. It just that if you add all of those, I mean, we're just nowhere. Instead of making a triangle here, I'll just leave it like this in a full back and forth zigzags. That's it. What else are you gonna do? It's a back and forth. That's it. One, two. I mean, if it's a diagonal, well, it definitely looks like one for sure. Got three ways up, three down, three up, three down, and another three up. So if it is a diagonal, this straight setup right there works. If Tesla will change their story, come up with a surprise or whatever the case is, you have this upside as well. I mean, which depends how long punishment that you're gonna take back and forth. It's gonna resolve higher in the end. Either I make this thing as a triangle, or I'll just leave this one as is. This push is still in play. Technically, if you look at the just a simple price, the swing of from this low, the price is making higher highs and higher lows. Okay? There's absolutely no denial there. That's your high right there. That's your higher low. That was the high right there. Now it came back down here. Now you just need to make sure that this swing right there stays above this low, right? It's a long way down. So what we're trying to do is you simply all you need is this. Like this. Okay. 138. Right here. So you draw your fibs. That's it. This is the low of 138.80 against this 148.854. Okay. There's a Elon and Trump divorce. Here's your 78.6 retracement, 213.64. The low was 214.25. Rallied all the way back up. So you just look from one level to another. This is that 52 mid right there. So now the price is bouncing between 313 and 354, which is the 50% retracement and 38.2. Okay. So this week with the Robotaxi, that's what the price did. Opened from here to here, then backed off. Now, this is your 78.6. You don't want to break this. I can tell you that. We're gonna have a big problem if that happens. This. You're gonna start breaking this. This low is gonna be in trouble. There was two retest here. This was a bounce. That was another bounce on the swing. So weekly swing is up. Okay. So what we can do, clean up everything. Leave the 78.6. 335, you already know the mid. What we can do now is throw a VWAP from this low, which is the 78.6, 299. Throw a VWAP from the high, 315. From all time high, 315, right? So a VWAP from here, then we can throw a VWAP from this actual low that we're trying to defend this low because of the higher low swing, 275. So we have a 275 VWAP, 299 from 78.6, 315 from an all-time high. So what does that tell you? 315, 299 is 15 points. 300 at 275 is 25 points. So that's the VWAP that we have right now. Okay. Then where the swing turned up and down, we mark those. There's one here, here. There's actually two swings happen here. Close this. Okay. Now look how much support that we can find against what we're looking for and where we can go. Here's your 78.6. Now you can just color some of them. Draw this one. We have one here. This prior swing high 291. You can see how many times price comes around, mess around between these where the swing turn directions. You know, the swing which is down right there is when the actual swing turns down. Okay, and then when it goes up, it turns up. So those highs and lows that you see right there, they're very important numbers. This is where the price always comes up, retest them, and kind of backs off. What you're looking for is the higher high swing is to see the price clear that one, you know, like here. See, that's the low, first swing, higher low against this low, right? And then what price did? Took out this high, got a big, huge pop to the upside, came back down, retested right there, came back, but it needs to stay above this low right there for this for this to, you know, stay alive, make a full move back up. So every time, so now this swing has to break. Didn't happen, backed off again. Now you mark this low. This is because where the swing turned back up again. Now you mark this low against this swing. Then you're looking to see if the price can take out this swing high. This is so simple, the swing trading. All you're looking for is the high and low breakouts. And you just mark them. The bullish trend is higher highs. If you are bull, you have calls, if you own shares, you're looking for price to go up. So what are you looking for? You're looking for a swing to make, you know, a higher high swing. So your same thing here. You see you have a high here, this one, and then finally clear this one through. Now, how much you can go up? Well, that's why we have the fibs. That's not the point. You're looking for direction where swings are keep turning around back and forth. What you have to watch against the second swing, you know, for now, on this, that's quite a bit of a huge move to the upside. Took a leg down, came back close to this zone again. You see, you have a double rejection. You have how many? See, you have one attempt here, backed off, came back this week, then another week, Then the third week, you finally clear this one up. See, it took 3 weeks. These are weekly bars. So same thing here now. So the weekly swing is up, as you can see from here, because why? Because that's a low. Now we clear this 291 first, and then we have 373 here. So all these down ones are gonna act as a resistance on the way up. Price came all the way back up, 367 against 374. Didn't really hit it. It's okay, but it was real close, and then sold off. And now it's just sitting right there. So weekly picture is what we're looking for, is to see if the price now can clear these two. This is your actual breakout level now. This is where the price backs off against this low. Now this area breaks, and then we can look for upside from there. So where will be the next upside? Mark this one. So you chase after this and this. That's your path to the upside against this. So weekly time frames are gives you a very good picture. And then you can make the case and bring them down into a 1 hour time frame. And if you just want to trade them that way, you can do it. But these are, this thing takes time. It's going to take a lot of time. This is a 1 week. I mean, it's a lot of back and forth on a one single candle, So, but if you cannot fight a smaller time frame unless you don't know what's going on in a bigger time frame. Because if I change this thing now into a daily time frame, see, now you're gonna see a whole bunch of different swings back and forth, back and forth. See how many they turn up and down. So if I go back to a 1 hour time frame, it's gonna be even more. Look at this. Back and forth, like, you see, get so many of them, how fast these swing turns. You can't sit and mark these highs and lows. It's such a narrow swing. I'm gonna show you. I'm gonna show you something that is coming for you guys pretty soon. Hang on for a second. Oh, I just shut the screen. Hang on. Do you see the screen or no?
No.
Okay, hang on. I want to swap screen. Just log in here first. Come on. Update installation is. Come on, Thinkorswim, are you serious? Okay. What's going on? Fuck. Did I forgot my own username? How's that possible? Thinkorswim is under maintenance. Your system may have connectivity issue while we complete our work. This cannot be right. Why I cannot even I can't even log in. Man, sucks. What's going on here? Login field. Can you try can you try to log into your Thinkorswim and see if it work? I want to show you something. See if somebody can if you can just log in and see. My phone is working for you. What the, I mean my app is working. Why I cannot I just got myself out because I have this thing saved on my iPhone. Okay. Oh man. So I always had that remember login ID. I don't know if I forgot my ID number. I really want to show you something really good. That's good. My phone, my phone app is working because I have that Face ID thing. Just mean right away, but then why my platform is not working? That's the only thing I'm kind of weird. Okay, there you go. I was I was putting a wrong user ID. Great. An idiot. Okay, I'm gonna. Here's the. Okay, where is the share? Okay, 3. Okay, you see your screen now?
Yes.
Okay. This is a. This is a Thinkorswim platform. That gives you buy sell signals. All you have to do, just follow the buy sell signal, nothing else. You can choose any time frame you like. Okay, it'll tell you exactly. It's down here. If I need to stop, let me stop the recording and stuff. So stop recording here.